welcome to Serving with Success, Resource Management. The objectives of this module are to identify the areas of resource management that are at risk and the purpose of the risk management tool. Resource management. The intent and scope of monitoring in this section is to apply a systematic approach to ensuring the overall financial health of a local education agency's nonprofit school food service. This section consists of a review of 4 areas integral to the financial health of the LEA's school food service: maintenance of the nonprofit school food service account, paid lunch equity, revenue from non-program foods, and indirect costs. The Resource Management Risk Indicator Tool uses known indicators to forecast and/or assess situations that may result in non-compliance. Identifies which local education agency or LEA are at potential risk for problems in resource management, and also identifies 4 potential areas of risk: maintenance of the nonprofit school food service account, paid lunch equity, revenue from non-program foods, and indirect costs. It is part of the off-site assessment review, which must be completed by the LEA 4 weeks prior to the on-site portion of the administrative review.
The risk indicators are completed by the LEA on our website prior to us being on-site to do the review. And your reviewer for your region is more than happy to help you work through these tools to help you make sure that you've completed them correctly.
If risk is identified in any of the 4 areas, the state agency must conduct a resource management comprehensive review in that specific area. The state agency must only perform a comprehensive review of all areas if the LEA receives 1 or more risk indicators in each of the 4 areas, or the resource management risk indicator is not completed at least 4 weeks prior to the administrative review. The Resource Management Risk Indicator tool is available at the website shown. Maintenance of the nonprofit school food service account. The state agency will conduct a comprehensive review of the LEA for maintenance of the nonprofit school food service account if any of the following is found: the LEA did not have a separate financial account designated for the nonprofit school food service. The LEA did not conduct a year-end review of total revenues and expenses to determine the school food service nonprofit status. The LEA had year-end expenses in excess of revenues, requiring a general fund transfer to cover the balance. Funds were transferred out of the nonprofit school food service account to support other operations. The LEA did not complete a process or state agency-approved plan to ensure its compliance with the requirement to limit net cash resources to a level at or below 3 months' average expenses. The LEA did not have internal controls in place to ensure that only allowable costs are charged to the nonprofit school food service account. Maintenance of the nonprofit school food service account. The LEA must maintain and use its nonprofit school food service account according to regulatory requirements. These include observing the limitation on the use of the nonprofit school food service account revenues and ensuring related costs are necessary, reasonable, and allowable.
When an LEA is being reviewed for a comprehensive resource management, we will look at the nonprofit food service and be sure that all the expenses that were charged to the food service account were actually allowable expenses by USDA's terms.
State agency monitoring of this area is intended to ensure that LEAs use all nonprofit school food service revenues solely for the operation or improvement of the school food service. Revenues may be used for food, equipment, and labor to operate the meal program. Revenues must not be used to purchase land and/or buildings or to construct buildings, unless approved by DESE Food and Nutrition Services. LEAs may use facilities, equipment, and personnel supported with nonprofit school food service revenues to support a nonprofit nutrition program for the elderly, funded under the Older Americans Act of 1965. LEAs must limit net cash resources to 3 months' average operating costs in order to ensure that funds in the nonprofit school food service account are expended to improve program operations and meal quality.
An LEA is allowed to carry a 3-month operating cost in their balance, but they don't want to go over that. But they also want to be sure that they are breaking even and that their program is not running in the red.
LEAs must comply with allowable cost restrictions and limit expenses of nonprofit school food service funds to those costs that are necessary, reasonable, and allowable. Adequately document loans the LEA may have provided to its nonprofit school food service account for the purpose of resolving a budget shortfall in the school food service account. If the state agency finds that the LEA has inappropriately spent nonprofit school food service funds on unallowable costs, corrective action will require a transfer of funds from the LEA's general fund for the unallowable expenditures. The state agency may consider withholding program payments, in whole or in part, to any LEA for repeated or egregious violations that are not corrected. The Resource Management Risk Indicator Tool, Paid Lunch Equity or PLE. The state agency will conduct a comprehensive review of the LEA for paid lunch equity practices if the LEA is found to have done any of the following: did not charge the minimum target paid lunch price at all sites or did not use the USDA Paid Lunch Equity Tool to evaluate its paid lunch prices. Used non-federal funds to support paid lunch prices, or the LEA received an exemption to the paid lunch equity requirement. Did not increase paid lunch prices if the paid lunch equity tool indicated such a price increase was required. If the only risk indicator the LEA received under the Paid Lunch Equity Risk Assessment was for a state agency exemption from the PLE during the resource management review period of the previous school year, and the state agency is able to verify that it granted the exemption which was effective during the resource management review period, the state agency does not have to conduct a comprehensive resource management review of the PLE. The state agency will document verification of the information in the comments section of Q.708 in the Off-Site Assessment Tool. When conducting a review of paid lunch equity, the state agency must evaluate the prices the LEA charges for paid lunches in relation to the federal paid and free reimbursement rates. To do so, LEAs must determine the weighted minimum price charged for paid lunches in the previous school year, the difference between the free lunch per meal reimbursement rate and the paid lunch per meal reimbursement rate in effect for the previous school year is called the reimbursement difference. If an LEA's weighted average price of a paid lunch is equal to or greater than the reimbursement difference, the LEA is not required to make any adjustments in lunch prices or to add revenue to the nonprofit school food service account as long as it continues to charge an average price that is not less than the amount of the reimbursement difference. If an LEA's weighted average price of a paid lunch is less than the reimbursement difference, the LEA must increase prices for paid lunches or add financial support from non-federal sources to the school food service account. The state agency must require the LEA to take corrective action for paid lunch equity if, during the course of the resource management review, the state agency finds that the LEA, incorrectly calculated the appropriate paid lunch charge, did not raise its paid lunch price if such an increase was necessary, used unallowable non-federal sources to support its paid lunch price, did not transfer a sufficient amount of non-federal funds into the LEA's nonprofit school food service account if the LEA did not raise its paid lunch prices. Revenue from non-program foods. If the LEA sells non-program foods, the state agency will conduct a comprehensive review of the LEA for revenue from non-program foods. When conducting a review of revenue from non-program foods, the state agency must assess whether the LEA took steps to ensure the revenues from the sale of non-program foods generate at least the same proportion of LEA revenues as expenditures from the purchase of non-program foods contribute to LEA food costs. FNS defines non-program foods as those foods and beverages sold in a participating school other than reimbursable meals and meal supplements that are purchased using funds from the nonprofit school food service account. Non-program foods include a la carte items and adult meals. It also includes items purchased with nonprofit school food service account funds for vending machines, fundraisers, school stores, catered and vended meals.
Some of the things you need to keep in mind when you're talking about these items is consider the amount of time that it takes the staff to prepare these items and being sure that you're being reimbursed for your time as well as what the actual cost is of the item.
The state agency will identify the categories of non-program food and beverages provided by the LEA. Ensure the LEA's non-program food revenues properly accrue to the LEA's nonprofit school food service account. Review the price the LEA charges for meals served to adults are priced sufficiently to cover the overall cost of those meals. The overall cost of the meals must include the value of any USDA foods, entitlement, and bonus. The state agency will also determine how the LEA assessed its compliance with the revenue from non-program food requirements, whether and how the LEA adequately addressed any necessary shortfalls due to insufficient revenues generated by the sale of non-program foods. If the LEA is in compliance with the revenue from non-program foods requirements despite not meeting the non-program food revenues to expense ratio, and if the LEA only sold a limited number of non-program foods, such as milk that had an identifiable per-serving cost. The state agency requires the LEA take corrective action if it did not have a sufficient process in place to accurately and thoroughly assess its compliance with the revenue from non-program foods requirements. For example, if the LEA did not include all non-program food revenues and costs in its assessment calculation, or did not ensure that revenue from non-program foods accrued to the nonprofit school food service account, or priced adult meals below the cost of producing those meals. If the LEA did not assess its compliance with the revenue from non-program foods requirements via either the non-program foods tool or 5-day reference period, or if the LEA did not take steps to adequately increase its non-program food revenue and/or secure general funds if it was out of compliance with the revenue from non-program foods requirements. Any violations of the program requirements require corrective action, which may include correction of LEA procedures for determining non-program food costs or raising its non-program food prices sufficiently to cover the LEA's non-program food costs. Indirect costs are incurred for the benefit of multiple programs, functions, or other cost objectives and therefore cannot be identified readily and specifically with a particular program or other cost objective. Indirect costs typically support administrative overhead functions such as fringe benefits, accounting, payroll, purchasing, facilities management, and utilities. Charges for indirect costs are based on two factors: the indirect cost rate established for a specific fiscal year and the corresponding direct cost base, a documented methodology that accurately allocates indirect costs. In most cases, the indirect cost rate is in the Indirect Cost Rate Agreement, negotiated and approved by the state agency. Indirect cost rate agreements expire annually, and it is imperative that LEAs use the most current approved rate for each fiscal year. State agencies must ensure that LEAs use the correct indirect cost rate and that the correct rate is applied to the correct direct cost base. The direct cost base is the sum of allowable and unallowable costs that receive a benefit from the costs in the pool.
It's very important to remember that your food service account is a nonprofit food service account, and any of the funds that are received into that account are returned back to the students in a way of providing meals for them, good, nutritious meals.
During a comprehensive review, the state agency will ensure the LEA is using the approved indirect cost rate from the state agency, ensure the indirect cost charged to the nonprofit school food service account is consistent with the approved indirect cost rate agreement, ensure indirect costs are consistent in all activities of the LEA unless otherwise exempted. For example, if the nonprofit school food service account is charged for electricity costs based on square footage, all other activities of the LEA must be similarly charged. The state agency will confirm the nonprofit school food service account was not charged for indirect costs that were previously paid from the general fund. It is allowable to bill the school food service account for indirect costs unless an agreement exists to show that the LEA has been loaned the nonprofit school food service account funds to cover the indirect costs in one or more prior years with the expectation of repayment. In such cases, accounting records should support implementation of the loan agreement. For example, a transfer of funds from the general fund to the food service account might be recorded as receivable. Ensure that proper classification of costs are consistently treated as direct or indirect. Confirm that school food service accounts are not charged directly for expenses that are included in the indirect cost pool, a practice known as double dipping. Verify that documentation supports actual indirect costs charged to the school food service account. Confirm that indirect costs were calculated based on the correct rate and the correct base. The state agency will conduct a comprehensive review of the LEA for indirect costs if the nonprofit school food service account was charged for indirect costs. Corrective action is required if the LEA is out of compliance with any aspect of the resource management review of indirect costs. Now that you have finished viewing resource management, complete the following brief quiz.